Per usual, everything on this channel is for educational purposes only and is not intended as financial advice. So it's been a while since I did a video for this channel, mainly because we've done a whole bunch of nothing in Bitcoin land. We had a proper, legitimate Bollinger Band squeeze, which is kind of ending with a whimper, but ultimately appears as though it will lead to bearish continuation. Bands get tight during low volatility, they expand during high volatility, and when they go from tight to wide, there's your answer on direction. All the while this was consolidating, it was below the 20 SMA, and right now it looks like we're headed lower. Brave call, I know. Everything I'm about to show you is not bullish. So if you're bullish, just mute the video, watch it to the end, help me with the metrics, and then close the browser, right? That's the best thing that you can do for me. If you want to hear more from me, weekly open once a week on Mondays, 11 EST with Ledger, Don Alt, and Venture Coinist. Do Ledger Cast every Friday. And I do 3 videos a week for BraveNewCoin, in case you're hankering for some more info from me. Back to the charts, BTC on the daily cloud. I was hoping for this mean reversion. I was positioned in the personal account for that. Still am, really. I'm in denial. That we were going to go up somewhere. 44, 47. Doesn't look like that's the case currently. Positioned for that on Enzyme as well. I had to cut the ETH. I'll get to the ETH at the end. But the expectation is if we're below the cloud, we're not bullish. That's just baseline expectation. But you can always get mean reversions. You can get a bearish trend with a correction in it, right? We had this mini correction that got smacked down. And when you're getting successive lower highs, right, that's never a good sign. And there's a lot of ambiguity here in the chart pattern stuff. I'll get to that in a second as well. But what you really need to see is this just needs like a month or two, probably into Q4. September's going to be trash. It's always been trash. Wake me up when September ends is a meme for a reason. September's going to be bad. That's just my expectation. But ideally, you want to see this back above the cloud, right? Or at the very least, setting up for a daily edge-to-edge move, which would probably bring us back to 47. But that is light years away. We could go to 20 first before we attempt any edge-to-edge on the daily. So I don't want to mislead anybody here. Not investment advice anyway, but there is no hope. All hope is gone. That isn't even despair. I'm just saying all my potential reversal stuff is gone. This is the 12-hour. We looked as though we were going to attempt something into the 12-hour cloud. We didn't. We got denied here. We got denied here perfectly. It's weird. I don't know why it happens this way. This prints 30 periods ahead of time, right? But it somehow knows that that's where resistance is going to be. So we had this edge-to-edge failure, and now it looks like bearish continuation. And let's say you don't even like the 12-hour. Look at the 8-hour. We never got that bullish Kumo breakout, even though it looked like we were going to. And again, the expectation was a breakout from 35 to 44. At least the potential for that was there. The potential is still there. It just looks extremely less likely. Again, I don't want to mislead people here. This is very bearish. If you're bullish here, please post in the comments below and give me the reasons that aren't fundamental reasons. I don't care about news. I don't care about anything. El Salvador. I care about none of that. Just show me the charts. The charts know better than the news, the fundamentals. Doesn't matter. Here's the 2-year MA multiplier. Switching gears to MAs. If you're an investor, let's talk to the investors for a moment. Traders, just cover your ears. If you're an investor, you're kind of ignoring this until it's sub 20, because historically, based on the 2-year MA, anything below the MA, in this case 20K or less, is a buy. You're just buying everything. You're DCAing, you're lump summing, doesn't matter. You're just buying, you're selling anything that isn't nailed down, selling any extra organs you may have, and you're getting in. At this point, ideally, anybody who's bought towards the top is panicking. I'm down 60, 70, 80%, right? And then they're just selling to you, the investor, the wise investor, who is saying, all right, sure, I'll take it. Just give it to me. More. Anything below 20, sure. Obviously, 31 is a bit of a ways away from 20. So there's your first big mega support. Pi cycle indicator, I'm just going to talk about it in case somebody asks in the comments. There isn't anything to say about this at this point as far as trades are concerned. It crossed. I didn't think it was right. It ended up being right. And here we are. You know, it may crisscross again in the future, but I don't think there's anything to say about it. Currently, the 200-week moving average heat map is another good one to show how much we've slowed down, obviously, but also shows to the investors the absolute sniper bottom. If you want the bottom to the picocent, okay, watch this. This will continue to move up slowly. But between 13.7 and 19.5, there's your range. It may take a year, it may take 2 years. It may go above or below those levels, but ultimately, based on the 200-week moving average, which historically has been the bottom, and the 2-year MA multiplier, together they can tell you when to start to invest again, okay? We're overheated up here. We never quite got to the oversold or overbought territory, but we're not even beginning to talk to the investors until we're below 20. And the most passive investors are probably getting back in at 13.7. If you're paying attention to the technicals, let's look at some other moving averages, right? Let's say you don't believe any of that stuff. You know, I do these videos for me, not you anyway, but let's just say for the sake of argument, you think all that is junk. 20 to 13 is too low, right? Well, here's the alligator fractals, and it looked like, again, we were going to attempt something here. Mid-June, didn't happen, got denied. We're still crossed bearish on fractals, and we're actually printing a short entry here as we break down below a bear fractal on the daily with the MAs being bearish. So again, bearish expectations there. This won't print anything bullish until the MAs are crossed like they were on the way up, right? This can get a bit noisy at the top, noisy during sideways, but when we're trending, like we really are now, right? The answer is pretty clear, just like the cloud. Let's say you hate that. Let's look at the 1050. Pretty obvious that we are crossed bearish and have been since 53. You know, again, this is going to get noisy. Any MA strategy, any trend following strategy is going to get noisy on sideways price action for an extended period of time. But it doesn't mean you should ignore what it's telling you, right? Even if stuff like this, where it's just a small or net zero trend, the trends that work out pay for the ones that don't, right? So let's say you were short here, got out of your short, reshorted, you know, it doesn't matter. You're still up significantly. So this is still bearish and doesn't tell you to do anything until that crosses. Let's look at the 50 and the 200. The gold standard, we're below the 200. We got denied at the 200 on that perk peak up there. And death cross haters in disbelief currently. Again, we are below anything we need to be above to be bullish. Here's the weekly cloud. We're in the worst part of the weekly cloud, which is the difference between the Kijun and the cloud. Like we were in 2018, this is just a free fall, hope we support somewhere zone until we eventually go through the cloud. It's very likely at the very least we will re-enter the cloud at some point in time into Q4, right? We'll see what we look like in Q4, but there's no signal here. I mean, we tried to bounce at the Kijun 4 or 5 weeks in a row, and we couldn't. So this is really just a no trade in action. There's no signal there. Let's look at the simplest MA, the 20-week SMA. Again, we are far below that. And historically, if we are below, we are bearish. If we are above, we are bullish. It's really that simple. It's got a little bit noisy in 2019, early 2020. But other than that, this thing has been mainly spot on with directionality. Let's look at VPVR. On Coinbase, there is a big gap from here to 20, and there is some support from 12 to 20. Most of the historic volume on Coinbase sits from 12 and below, right? So at the very least, you know, people were talking about 22, 24. Based on volume, it's not really there. There's a yearly pivot at 21. There's a yearly pivot at 13, 12, whatever this is. And like in 2018, we hit that yearly pivot at the end of the year, almost to the dollar. These print January 1st based on the previous year's price action. So I certainly hope that we don't break 21. And if we break 13 this year, I mean, it's just, I don't know what, that would be failed experiment territory, I think, if we drop below 13 this year. But again, there's a gap in VPVR, there's a gap in pivot to pivot, right? The next pivot support is significantly lower. So even based on math, there's nothing to help you there. Let's look at the pitchfork. Again, if we are below this pitchfork at the midline, the expectation is an attempt to delve down here somewhere, just like here to here is 21 to 24, right? 18 to 24. Those numbers just keep coming up over and over again as far as high time frame supports that I'd be looking towards. And oh, by the way, we've got legacy people looking at this saying, guys, this is a head and shoulders. Look at this epic short opportunity. It doesn't matter if you believe in this or not. The point is, if enough people see it and talk about it, it's a self-fulfilling prophecy and it just plays out, right? And we are dangerously close to this playing out. Does the volume profile match? No. Does the pattern match anything necessarily? Not really, but it's close enough, right? Like it's there, right? You can see it. It's definitely there, and that would be 1618 fib of 12 if it just measured like conservatively. So I definitely don't like that. This is the 4 hour, and there's tons of ambiguity here. Is this a descending triangle? Maybe. I'm kind of in that danger zone of bounce or die here. Volume is basically dead. That's another issue here. Low volume chop can do anything, and when the default trend is down, that's where it goes. And oh, by the way, this could be a head and shoulders too here. So we have a mini and a macro, and there's just a series of head and shoulders over and over again. It doesn't matter if they're real or not. The point is the market is saying there's no strength here. There's none. The expectation is down. It wants to go down. And if this plays out, it's just going to play into the macro head and shoulders, right? And again, volume is just, there's nothing. There's just nothing there on Coinbase. And if you're unsure as a hater, if there can be a head and shoulders at the bottom of a downtrend, look no further than the weekly US oil chart. So save your stamps and letters. Yeah, it can happen. Yeah, it does happen. It doesn't happen too frequently, but I love the weekly oil chart for this very reason. Head and shoulders broke down. Boom. That simple. Maybe the most bullish case you can make is some sort of falling wedge with a bullish divergence. Maybe, right? But looking at all the other bear evidence I've gone over, it's hard to say, yeah, this is the one, guys. This is the one that's going to hold up the entire market at 30K. You could also say that there are tons of wicks here, but I don't, in general, expect support to hold every time we make wicks at that level, right? If you're making wicks at 30K over and over and over and over again, and the market just keeps pushing and knocking on that door, eventually that door is going to open and the floodgates are going to open and you're going to break that level. And we just haven't seen volume pick up, certainly in the past few weeks. There was some volume here on this low, at least on Coinbase, but I'm not optimistic. Even though I'm holding BTC, I'm not optimistic. The one thing that's a bit odd is the people selling aren't anyone who's been holding for a while based on the HODL metric. So every coin has an age that it's last moved, and the time between movements can be measured. And if you look at coins that haven't moved in 3 to 6 months versus 1 to 3 months versus 1 week to 1 month and so on, there are just less and less old coins moving. So hodlers are hodling, as they say. And a lot of this new price action or downward volatility or lack thereof has been mainly based on this newer participants. You know, there aren't spikes here or growth in older coins moving. We are kind of maturing coins. If anything, if we turn on all of these, the older slices are getting larger, at least should be getting larger, right? Especially this 6 to 12 month slice. Certainly getting larger. Any slice above that should be getting larger. Anything that hasn't moved in 10 years is probably gone forever. But we're not seeing panic here at all yet, right? Maybe that's more bearish than bullish. If you look at MVRV, this is market cap versus realized cap, market cap versus how much has moved on chain. And we're not quite yet in that buy zone. We have a ways to go yet there. If we look at Puell Multiple, everybody was celebrating when the mining stuff fell off the table. That Puell Multiple was printing a buy signal. And my caution to you here is anytime there is some weird black swan change in anything, you kind of have to wait for that to normalize. And hey, look, Puell's back up to a non-buy zone area, right? Once that difficulty adjusted. So keep that in mind. This is still fine to watch. It's just when, you know, mining drops off 30% in 2 weeks, then Puell Multiple may need to be put on the back burner for a second. So we had that negative difficulty adjustment, third negative in a row, and we're setting up for another negative. In 2 days, I see people celebrating like mining coming back, miners being turned back on. I don't see it yet, right? There's still more negative here, drop off in difficulty than increase in hash rate. Yeah, it's come back slightly, but we're still printing and setting up for a negative hash rate. I'll talk about ETH real quick. It's all the same stuff, but kind of worse. One big thing to watch for ETH is gas prices. Gas prices need to be high because that means people are using the chain. So long as nothing changes with scalability in the near term, all the factors that were true previously are true now. So we want gas to be high because that says people care about DeFi, they care about using ETH to pay for scams, whatever it may be. If gas is sub 10 and we're just creeping lower and lower and lower, that just means there's nobody here. There's nobody home. Would the last person to use ETH please turn out the lights type thing. It's good to see gas prices creeping up. I don't care why. I don't care that it's some MEV stuff, some flash bots. Like, I don't care. It doesn't matter to me. I just want to see that increasing and continuing to increase. The most scary chart on ETH is this pitchfork, because if this is true, which everybody for the most part has been in denial, ETH is going back to 650. Let's say you don't like this version and you like this version, it's still no better, really. It's 840. I like this version better because the diag is cleaner. This version has a bit of a messy diag, but whatever, right? It doesn't matter. Call it whatever you want. Sure, have your 850 versus 600. Like, it doesn't matter. It's still way lower than it is now and would represent an entire January retrace from top to bottom since the January 2021 breakout. If we look at the 12-hour cloud, again, there was a potential here for an edge-to-edge move to 3K. Didn't happen, got denied. We got a bearish TK cross below the 12-hour. Can't be bullish on that. The daily was setting up for a mean reversion trade. Didn't happen. Now it's looking more and more like BTC in 2018, where we just had months and months of lower highs with equal lows that eventually led to mega doom for several factors here, but we were never above the daily cloud that entire time. And I would watch for this on the 12-hour ETH specifically, because that's where it looks most like 2018. Until this is above the 12-hour ETH cloud, there's really very little reason to be long ETH unless there's some chart pattern or some mean reversion potential. We had this ascending triangle W thing, didn't work out. Very similar to this, by the way, which was an inverted head and shoulders that did not work out. Went for lower lows, we get a W, went for an edge to edge that actually looked legitimate, failed, right? All of this is lining up with ETH on the 12-hour cloud. So watch for a series of equal lows over the next 4 months, right? Watch for any attempt for higher highs through the 12-hour cloud. I would definitely be watching that. Talking to the investors for a second, 1300 or lower is where historically that has been a good buy. There's a new index on TradingView that I just realized was there for Ethereum. So that's going to be pretty helpful in the future. But 1300 is definitely the level to watch to get back in a comfortable way, let's say. Here's the 20-week SMA, again, above or below. It's really not ambiguous here in general, but aside from early 2020. And we are definitely below, no questions about it. That 20 SMA. The 1050 cross has been bearish since 2600, 2700, 2800, whatever that is. So that's something to watch if you want to be strong and long again. If you want to ape into anything, watch that 1050. 5200 is still holding at the moment, but I suspect that this will continue to squeeze and eventually break down. That's where we're headed, kind of across the board. Alligator fractal looked decent, started to cross here, and then got denied, right? This is where I bought some ETH personally, bought ETH on Enzyme, and just nothing happened, Like, that's just trading for you. And oh, by the way, there's also this super nasty looking head and shoulders potentially on ETH as well. Is it really there, right? Like, probably not, but people are going to trade it like that. And volume doesn't match at all. Maybe there's another head and shoulders within this, whatever, right? It doesn't matter. It's just this shape is not bullish, certainly. And this could just Eiffel Tower back to the January open pretty easily. ETH BTC looks weak as well. I mean, I don't really trade this directly ever anyway, because I think it's too much of a noisy chart. But based on the pitchfork, based on yearly pivots, based on the 200-day EMA, based on the VPVR, I like 0.05 as a decent support. And if that fails, 0.04. It's kind of it on the analysis there. And really, ultimately, if DXY breaks up, which it looks like it will, doesn't make sense. It shouldn't break up. But if it looks like it will break up and it breaks up, we are bearish crypto. That's an easy 20K spike, I think. We can't be bullish crypto and bullish DXY. I just don't think that's a universe that is possible. I hope I'm wrong. I hope this doesn't break up, but this looks like it's headed to 96 pretty easily. You know, if this is what crypto charts look like, I would be much more optimistic. You can tell me this isn't an inverted head and shoulders. I don't care. Like, whatever you want to say, this is going to 96. Sorry, folks. So that's all I have for this one. Like, dislike, comment, share, subscribe, and for God's sake, happy trading.